Investors and traders, welcome to the channel Market Chart Pattern. Today is 31st of March 2024, and I hope everyone is having a great fantastic weekend. And also it's been a long weekend, so everyone who is celebrating, congratulations, and I hope everyone has had a fantastic day. So in this video we are going to take a look at the Dow Jones Industrial Average Cash Index and cycle analysis because of the key dates that we have been watching for, which are coming up pretty soon now. And we will also take a look at the US broader stock indices, and we'll take a look at the dollar index, select currencies, and also gold. And importantly, we'll take a look at the bond markets, because the bond markets, in my opinion, they are about to reach a point where perhaps there is a possibility of some sort of bottom coming in as well in a near future. As always, this video is for educational purposes only and it's not a financial advice. With that, we'll take a look at this chart. This is the daily chart of Dow Jones Industrial Average Index. It is the cash chart, so it's the cash market. It's not futures. And what we are looking at is basically our timing model that we have been following for quite a while. Our longer term subscribers will know that. We had a key date come in around the 27th of February 2024. That was last month. And the way the timing works is timing is elusive. We have to give it 2 to 3 trading days, plus minus on either side of the key date, to see whether how the market is actually, the price action is going to react with respect to the timing coming in. And so far what we have seen is the market to respect these dates. Some of these dates have actually produced really key points or turns in the market, and some of them not so much, but indeed those markets or those timings have been very interesting. So I'm not going to go into the details of how these are being calculated. I've already done a video about this, you can watch in the archives, but just to have a quick recap to it, this was a date coming in on 31st of October 2023. It was the 0.618 internal Fibonacci retracement, and that produced a massive turning point. And then we have another one which came in around the end of the year, last year, 28th of December 2023. We saw the market go sideways to the down for a few trading days, and then this upward trend resumed. And then recently we had another date come in around 27th of February 2024, and what we actually saw was on the Friday, 23rd of February 2024, the market put in a micro top, in my opinion, and it just went sideways. Did this one ABCD 1-to-1 price projection lower, but indeed for a few trading days, a week or so, the market was just range bound. And then we have seen the acceleration to the upside, and now we are reaching a key date. And in my opinion, this one is a lot more important, because we have a confluence of two things coming together. So we have the 1.618 Fibonacci external retracement coming on the 2nd of April, and then a few days later on the 4th of April, next week on Thursday, we have our low to low cycle come in as well, which is about 44 trading days. So the low to low cycle, I'm not going to go into the details, but if we look at the key lows which have taken place in this market cycle, we see that those are either a 54 days expansion by a factor of 2 or 1.5, and sometimes they're actually also contracted by a factor of half as well. So with the confluence of two things coming together, especially with the expected low to low cycle coming in next week, it'll be really interesting to see how the market is actually going to trade from a price action perspective next week, because this key date produced somewhat of a pullback. Whether this cycle, probably if it is a cycle low, could we see an acceleration of the market to the upside? We'll have to wait and see what these timings are actually going to unfold for us for the price action. Okay, so with that, let's actually go and have a quick look at the bond market. So this is the daily chart of ZB, which is the Treasury bond futures. It's a really large market. This market is actually larger than the stock market. And here what we see is we have seen a decline take place, then a bottom coming in, but we do have this downward trend line. So what we are really interested to see is how this market is going to basically look at some of the resistance that is coming up from the trend line, and also from some of these Fibonacci ratios. So we just have this 120 level, which is a key resistance level, just right above where the market is at the moment, or where it closed a few points above that. So maybe there's a possibility, if this turns out to be a resistance level, we could see the market maybe pull back a little bit, and then what we're expecting is maybe it just might go and challenge these lows, or maybe a little bit lower, form this ABCD pattern. And then what I'm expecting personally is for this market to then put in some sort of a bottom, unless it has already done that. So we're just watching this. If it's able to get above 120.23, that's very positive for the market. If it's able to break out of the trend line, then this ABCD, which is drawn in the red line, the chances are this market actually might be fulfilling this pattern formation, one-to-one price projection, and actually go and challenge these highs of around 134. And usually when the bond market is rallying, it has a influence on the stock market, as well as the chances are maybe the stock market also rally. We'll have to wait and see the price action. So quickly taking a look at the 10-year Treasury note, here again a similar kind of a pattern formation. A little bit one thing I would like to say is that if we just take the whole retracement of this here, it's around 38.2%, and of course we have the downward trend line here as well. So some sort of a resistance coming in, and this is actually a wedge pattern formation in my opinion, if you just draw it like this. So it just really needs to break out on the either side to have a sustained breakout. And of course, if the market breaks to the upside, then that means the price is rising, the yields are falling, and that could be a good thing with the interest rates, the pressure on the interest rates coming into interest rates perhaps could go lower, or the Fed might actually in one of their meetings make a decision to cut the Fed fund rate. So we'll have to wait and see what it's going to do. Now, really important is this chart for the dollar index. This is daily chart for the dollar index. We'll also take a look at the weekly chart as well. So if you recall the video which we had done previously when we looked at the dollar index, I believe it was in one of the videos which I did for the Forex last week. Here we were pointing out that there is a possibility that 104.35 might in fact be a key resistance level, because we have this ABCD formation, one-to-one price projection, the one which is highlighted in red here, right at the 78.6% Fibonacci retracement. And what we saw last Thursday was market just reached there, pulled back a little bit, but unless it is able to convincingly close above this on two closing basis, the chances are that in fact this might actually prove to be a pretty good resistance level, and the weakness in dollar could come in, and which could be helpful for commodities, precious metals, and even copper, although copper in my opinion has put in a pretty significant top. Well, I think I'll do the chart of copper as well. Normally we don't take a look at copper, but it's just forming such a pattern formation which is worth talking about. So towards the end of the video, I'll just cover that before going deeper into the stock indices. So here, this is the weekly chart, and here is what we were discussing. On the daily chart, we see 104.35 being a pretty good strong resistance level. If that is broken to the upside, then of course the strength in the dollar will come in. The next key resistance level will be around 107 level, and above that 108.75 is also possible. But again, a lot depends upon 104.35 next few trading days, how this market is actually going to trade from a price action perspective. but in my opinion 104.35 is a pretty strong resistance level. And with that, we'll just quickly take a look at the Euro USD, one of the key forex markets, and it's kind of a inverse it's inverse to dollar index, because the dollar index is about 51% of the Euro USD, so the Euro is a big component of that. And I'm just gonna move to the 4-hour chart because something a little bit more visible there. This is a pattern formation that we are watching, which is highlighted in this sky blue color triangle. We were looking for this ABCD 1-to-1 price projection, which is coming in around the 61.8% retracement. A little bit below that was the ABCD, and what we have seen is market actually trade a little bit lower towards the 78.6% retracement level. So yes, it has gone a little bit lower to the level that we were actually watching for, but it does appear that this, as long as it remains in this zone, the chances are the market could actually rally to the upside. So we'll be really watching for the price action earlier in the week to see if there is going to be some resistance that is coming in. And we have this trend line as well. We have 1, 2, 3 points coming in here, so there is a possibility that this is actually also a wedge pattern formation like this, and the market will have to break out on one of the directions. So again, looks like we are in this key pattern formation that we are watching for, where there is a chance of a pretty good support coming in this market. Now, when we move to the British pound, in British pound is actually this is much more visible, and it appears that British pound is actually a little stronger than the Euro USD market. So here what we are looking at is in this blue is the 1-to-1 price projection ABCD coming in right at the 78.6% Fibonacci retracement level of these lows from here. This low of this range from here to the highs here is 78.6%, and then we have the ABCD. So it's a very strong where it's a pretty strong support level around here. And what we have seen is market just go nowhere for about a week. It's just 25th of March last week. This is when it started trading around this level, and it's just been trading in this range, which is an indication that this might actually prove to be a pretty strong support level, and the market could in fact rally, and what in terms of the minimum rally we should expect would be to around 38.2% retracement, so around roughly 1.27. And if we were to look at what the last rally was like, so if we just take this one, and it also comes around that, so a little bit higher, so around 127.10. So yeah, 127.10 is something which could be expected for this market. And when it reaches there, what we are going to have is a trend line coming in around here, market moving into trend line resistance as well, and then it'll be the case whether it's able to break out of this trend line to the upside or break the 38.2% retracement. If it's able to do that, that is going to be a pretty strong indication, and in my opinion it would mean that this market is actually likely to go higher, much higher, and maybe as high as 129 or 130 as well. That's the possibility, because that's the 1.27 Fibonacci expansion of this entire range drawn till here, but I could also draw it till here as a more expansion of this move. So this is what we are looking at. Let's quickly take a review of the Japanese yen as well. Really interesting market. So we are highlighted the double top formation here. It's a double top with respect to this top, and now it's going and challenging this top again. We'll have to wait and see. There are rumors in the market that the Bank of Japan might do some sort of intervention in the market, so I'm not going by any rumors, just looking at the price action. But what we have seen is the market is just in a very tight trading range, and it's just tackling this level. We'll have to wait and see how it's gonna pan out, but from a trading perspective, it's something personally. It's not an advice. I will be staying out of this market, just watching the price action unfold. With that, let's take a look at the gold. So gold had a tremendous week last week, and especially last Thursday before the market closed for the longer weekend. The gold had a fantastic rally. And what is something really interesting is that with this rally, the gold is also moving towards our targets. So one of the targets is around 2285, then we have 2293, and above that 2325. So around these regions is somewhere where the gold looks like is heading to, and this is where we'll have to really watch the price action in gold, because after a really extended rally, especially after completing this big ABCD and then the blue one here, the chances are that the gold might actually start some sort of a pullback. We'll have to wait and see if the price action is really strong. Then the chances is gold actually go higher, especially because of the weakness coming in the US dollar. But for now, our targets, this is where the market seems to be approaching, and this is what we had been looking for on the daily chart. Okay, let's take a really quick look at the high grade copper. So this is the daily chart of the high grade copper, and for me, this 4.17 4.15 to 4.17 is a really key resistance level, which in fact could prove to be a major trend reversal. I should put a question mark here because the it's just not confirmed. And the reason is that we have got a confluence of quite a few things coming around here. One of the key ones is this 78.6% Fibonacci retracement. Then we have the 1.618 expansion of this swing from this high around here to this low around here, and then also we have the 1.38 or the 38.2% expansion of this move. So if we were to take this low to this high, then there's a chance that this actually move expanded by 38.2% retracement. Expansion is something you don't see me talk about a lot, but it's something I actually do look at as well. So because the confluence of number of things coming together here, and also we have this ABCD formation completing a little bit low around 411. In my opinion, should the market get here, there's a chance it might actually make a retracement around here, maybe a little bit higher high, as long as it remains below 44.17 on daily closing basis. In my opinion, this could be a pretty strong resistance level in the copper market. Okay, with that, let's actually now move to the US stock indices, and I will start by taking a look at the New York composite, New York Stock Exchange composite index. Now this index is a really broad market. It's not tradable, or it's not at least tradable now. Maybe in the past it used to be. And here the reason we like to take a look at this is because it also includes ADRs as well, and I believe it includes about 2,000 stocks traded on the New York Stock Exchange. And of course we have the Wilshire Index as well, which is much bigger, maybe about 5,000, but for the shorter term trading purposes as well, this one is a pretty good benchmark. So what we are looking at is that, in my opinion, this market is moving in this one-to-one price projection ABCD, and then we have the 1.272 expansion coming in around 18,585. So the chances are market is actually trying to make that price level. Now let's take a look at the weekly chart of the S&P 500. This is the weekly chart of S&P 500 cash, and one thing before talking about the pattern formation which is taking place currently, I just want to bring your attention to this long-term trend line. Like, this is a thing of beauty, to be honest, and it's still intact. If you look at on YouTube, there's a lot of chatter about a lot of things, but the reality is that this is why we like to take a look at the charts. That this market is actually moving from the left hand side of your trading screen to the right hand side, and if you just connect the dots, and draw a trend line, you'll see is moving up, and is moved right into this region that we had been looking at for a while. Last week it made a higher high on the cash market, just by a margin, but it did make a higher high, so a new all-time high. This blue line is the ABCD. This is the level that we were watching for, and the market has reached that and exceeded that, to be honest. Now the other level that we can also take a look at is basically this BC swing here that we see around here, this one. Maybe market try to make a move for 53.90 level on the cash index. We'll have to wait and see. And given the fact we have that timing come in as well, maybe this coming week is a key week to watch. So this is the shorter term target. There are like higher term targets as well. I'm not sure if the market will be able to get to those in this cycle, because the markets don't typically go up or down in a straight line. Although this has been a fantastic line to watch. So this is the shorter term one that we are taking a look at. And now I'm going to move to the futures. So this is the weekly chart of the S&P 500 E-mini futures. The market has just opened up, and it does look to be a gap open, so stronger, and then just the big swing expansion from here, or rather extension from here to here. Looks like it might be on its way to 55.70, which is the 1.618. Now the key thing about this futures one was we have this one-to-one price projection ABCD of this entire. If we just take this like this, maybe I've not drawn it properly. Let me actually draw it again for you guys. Okay, and we take this. We're going to take this low. We're going to take this high. Just clone it. And then we project it from here. So, yeah, this is the level that, much like the cash index, we were just watching for this one. And this one price projection is also broken to the upside. Not by a lot, but still a good amount. So the chance remains that 55.70 might be the one the market actually might be targeting as well. So we'll have to wait and see. Now let's take a look at the NQs. One of the things about the NQs is this is the weekly chart of the NASDAQ 100 E-mini futures. That last week the NQ futures had been actually or the NASDAQ index NDX had been a little bit weaker compared to the broad indices such as S&P 500. So there is some sort of a weakness as it appears that took place in the growth stocks. And the reason is that if we just look at last week's price action, we can see that although S&P 500 made a new all-time high, the tech stocks did not do that. So this is something we just need to keep in our mind. And also they're trading at really key level of 18,570, which is the 1.272 extension. And for a couple of weeks, so 4th of March and then 18th of March, there's potential for this double top formation here, unless of course the market makes a move higher and makes a new all-time high. And the chances are it could do that. And the reason is that we have this one-to-one price projection ABCD in the red line here, and then another one in this green color here, which is a little bit higher. So we do have higher targets as well. I think eventually in 2024 we might actually see 20,770 level, 75 level here. But for shorter term, I think we are in this territory where there's some sort of a pullback may happen in some near future. But looks like shorter term the market actually might be targeting 19,375, maybe a little bit higher, around 19,675. We'll have to wait and see. And of course the potential remains of this turning out to be some sort of a double top formation, although it's not confirmed. If the market begins to make a pullback and especially begins to close lower than this 20-week moving average, which is around here, then we'll have a confirmation that maybe the market did put in a double top formation right at our key level that we have been watching for quite a while. Now we'll take a look at the Dow Jones index. Here we go. So the Dow Jones index is really interesting because it had been, so this is the E-mini futures, right? It's not the cash index. Cash index we took a look at for our timing. It's been pretty strong in my opinion. At one stage it did look, it was much weaker around here, then further when our key level came in around 39,137. Now it has broken above this channel. So around here I had just drawn this. All it means is market symmetry. When the last pullback happened, it was about this much. Whenever there is going to be a pullback, you know, we can anticipate maybe it could be of this much magnitude, but for now, do not confuse people. I'm just going to remove that. So it's broken above this channel line here. Now the chances are it's actually going and targeting 41, in fact 42,000 or 41,983 to be precise. There's a possibility the market actually could do that, because that's going to be the 1.618 extension of this entire swing high to low here. So another interesting one to watch, and something which I have not drawn here, but if we were to just draw this really massive ABCD going back all the way to the COVID lows of March 2020, that's way higher. So I think for now I'm just gonna leave that out so we don't confuse things. We'll take one step at a time. So 41,983 is something that we are watching for. I believe the Dow Jones hasn't made 40,000 on the cash index, so it looks like that's on the cards for the cash index. Last but not least, Russell 2000. Russell 2000 is really interesting. It's also very important we take a look at this one, because, and the reason is because it made a new high as well last week. And what it did do is it made a new all-time, well, it's not, excuse me, not an all-time high, but new high. And compared to for example, the NASDAQ, which did not take previous week's high out, but Russell 2000 did. And right at the 61.8% retracement level, which has been a resistance level. So it'll be really interesting whether it's actually finally able to tackle this one as well to the upside. And then of course the chances will clear that's going to go and tackle the these all-time highs it made back in November of 2021. So a really important chart to watch, really important index to watch for next week. Small caps, how they're going to trade, what the price action is going to look like, if there is going to be a pretty good activity on the positive side in the small caps, then the chances are what these small caps are doing is a one-to-one price projection ABCD, which is going to take it to pretty much in this zone of its all-time highs, but this one-to-one price projection comes in around 2,373 as a shorter term target. So guys, thank you very much for watching the video. Apologies, quite a long video, but we had to cover quite a lot, and of course this is the weekly video, as I'm not able to do the daily videos, so the weekly videos a little bit longer. Do apologize. I'll try to do more daily videos so that we are able to break a lot of this content into intra-week content as well. So thank you very much for watching the video. Good luck and good trading, and speak to you guys soon.